The most common question I get is, Peter, how's commercial property going? G'day, I'm Peter Bender from Bundaberg Commercial, and I'm a commercial realtor and business broker. So commercial property is pretty much in my DNA 24 hours a day, 7 days a week. So it's a very common question that I get. Right now, it's a very turbulent time. We've just had Donald Trump's trade tariffs sort of unsettle the stock markets, not to mention a whole heap of leaders around the world. There you go, Donald, just shake that tree, mate, shake the tree. But it also has ramifications on our commercial property market, which is normally a fairly stable market that doesn't have a lot of crashes and rises. It's more undulating like waves as it goes. However, to understand what's going on in Australia, we need to also understand what's happening around the world, because quite often what's happening around the world is a precursor for what we can expect. So these last couple of weeks, I've had a close look at markets in the United Kingdom, in Canada, and the United States. And I just thought I'd share with you some of the changes that are happening over there, so we have a bit of a feel on the forecast on what we've got in Australia. At the end of the day, the real snapshot is the Australian property market is probably at the top of the peak compared to a lot of the other property markets around the world. Let's have a look at the United Kingdom. So population's a lot bigger and it's in a whole different continent, but there are some similarities in there. Well, firstly, the deposits that you need to have to get commercial property in the UK, you're looking between 20 to 40%. And that depends if it's an owner-occupied or a commercial lettered property. They actually charge a higher rate for owner-occupied properties, which is interesting. And it's something probably unique to England or maybe Europe in itself. You're looking in regards to the interest rates. The interest rates currently for a commercial loan, which is underpinned by commercial property, looking between 4 to 5.5%. So that's not too bad. And it's probably on the lower end of their cycle because most countries around the world have been dropping their interest rates, and Australia is only just starting to get into that groove, so to speak. And the other big question that is in places. So what's the capital rate? What would you expect to get as a rate of return if you had a property in the United Kingdom? Now that varies between 4 to 8%. And the main difference is 4% in the cities, 8% in regional areas. So the higher the risk, you're looking at 8%. So when you're looking at a deposit of 40% with an interest rate of 5.5% and a cap rate of 8%, there's a little bit of room to grow there, but that gives you a bit of a feel for what's happening in the United Kingdom. I also had a look at Canada. Now, Canada is interesting because for several reasons. One, it's got a similar size population to what we have. Mind you, we tend to be in a lot warmer climate than what Canada has. I've actually got a nephew that lives in Canada, so I have a bit of an understanding of what goes on over there. And people like to, particularly when they look at OECD figures, they like to have a look at comparing Australia and Canada because there's a lot of similarities. We're both English-speaking countries, except for the parts around Quebec, I suppose, and all the Kiwis in Australia. Sorry, am I allowed to say that? But it's all fun and games. So what's happening in Canada? All right, in Canada, you would need essentially a 25% deposit. So that's pretty good for commercial lending. The interest rate in Canada is between 5 to 5.87. 5.87 is probably the norm nowadays, to give you a faith there. And the interest rate is actually rising in Canada. So they've actually gotten to the stage where their cycle is almost 180 degrees different to us. We're just starting to go down in interest rates. They're just starting to go up. The big pillar in Canada is the property tax. Property tax is $14,000 per annum on a $1 million property. That's a lot of tax. And if you're an investor, you need to really factor that in. So that's one of the good things in Australia. In Queensland, we have a property tax, but it's got a threshold, I think, of $250,000 for properties. And it's a small margin, but it's always a dangerous one because it's an easy one for governments to raise. And as you can see in Canada, $14,000 a year on a $1 million property is a sizable chunk that you've got to pay out of your pocket. The cap rate, so what would you expect in Canada? It's pretty solid, about 7.44, which is very similar to Australia. We're looking around about 7.5% for most areas, depending on what you've got. once again showing that similarity between the two markets, and it's pretty solid. Other things that are happening in Canada is there's probably been a 20% reduction in prices of commercial property in the last 12 to 18 months. And that has a lot to do with the fact that America is in a crisis with commercial property. So unfortunately, Canada gets quite often brushed with the same brush in that aspect. One thing that I did find that was different in Canada compared to other countries is commercial loans are generally only 12 months. So you need to constantly be refinancing. It's almost like by the time you finish, the ink's dried on your contract, you need to start negotiating for next year. So that is a challenge as well in the market over there. If we have a look then at a slightly bigger market, if we look at the United States market, some of the things that are a little bit different. They buy property in a weird way. What I can understand and what I've seen is you essentially buy a property uninspected. Now in Australia, we have a changing trend. It used to be you buy a property and then you do your due diligence. But even when you bought a property, you've usually had to walk around, maybe taken a friend or a building inspector or someone around just to make sure you've got something solid. In America, they seem to buy things sight unseen and do their due diligence after the actual signing of the contract. As the due diligence period, it tends to be a little bit longer. It's 45 to 60 days to do the due diligence period, with generally a 30-day close period after that. I always tell people that nothing moves fast in commercial. It looks like in the States it may even move slower than what you expect. There's a big change in America, and it's probably a couple of weeks ago, is the commission rates that they've done in commercial property and residential to a lower extent. In America, if you have a buyer's agent, it was quite normal for the seller to pay the buyer's agent's fee as well as their own selling agent's commission. So if you had one agent charging you 6% for selling your property, and your buyer's agent was supposed to charge their client 3%, well, that 9% actually used to go to the seller. The legislative bodies in America have brought in legislation to change that. They said, that's just not fair. That's not kosher. I don't know what the American equivalent term is. It's just not truth, justice in the American way, like Superman. So what they've actually done is broken that apart now. So sellers only are responsible for their own real estate agents' commission fees. So that is something that's changing a few things. Because the main reason it was a challenge was it was hidden. People didn't actually know that they were paying for the buyer's fee and how much the buyer's fee was involved. So they've broken that up. In Australia, you find that individual parties pay for their individual real estate agents, whether it's a buyer's agent or a seller's agent. Other things that have come across. All right, so what's the cap rate in America? It's about 12%, which is huge. But you've also got to recognise that right now is probably not the time to be looking at what's happening in America, because it's probably flattened out. But we've had entire skyscrapers being handed back to the banks for $1 because the organisations, the big corporate like Brookfield multiplexes and the likes of that, are at the stage where they realise that it'll take them a long time to get their money back because so many people are working from home and haven't returned to offices. It's going to take these large corporations a long time to get their money back. So they're just handing it back, saying it's cheaper just to default on it and let the bank worry about it. Scary stuff for the bank in particular, and it's rocked their economy. But very much it's at the stage like the Band-Aid's been ripped off, and it's probably 6 months now, and things are starting to stabilise a little bit. Cap rates and interest rates are all over the place right now. So it really depends on the market, and it depends on the tenant, and it depends on the type of building. There's a whole heap of variety, too much to talk about. But recognising that America is 10 times the size of Australia, so their commercial sector is massive. Even just categories. They're what they call open land commercial properties, things like parking bays, caravan parks. Just that market itself is probably bigger than the entire Australian commercial property market, and that's only a tiny segment in America. So that's an interesting space. I'm going to put out a video pretty shortly on some of the YouTubers that I watch on commercial real estate. So make sure you hit subscribe and put a nice comment in the bottom down as well, so that when that video comes out, you'll get that, and they'll have the main go-to people that I use to get information overseas as well as America and Australia. All right, so what's happening in Australia? Okay, lending, you're looking around about 50 to 55% for commercial property. So you really are at the stage where you probably need to front up 50% of the capital for buying your property. Will that change as the interest rates go down? Maybe, maybe not. Probably will. It will probably loosen up a little bit. She's pretty tight to expect people to have half the funding for the property, which means you can't borrow as much. The days of having 10% loan and loaning 90% so you can use your $50,000 across 5 loans, it's going to be a while before they come back. They will come back. Every boom follows a bust. Every bust follows a boom. People tend to forget about that, and it's just the time that's the difference. The other question I quite often get is, how long will a bust go for? Look, I've seen busts that'll last for 3 months and busts that'll go to about 6 years. I'm not saying that we're in a bust, but I'm saying we're definitely going to be in a slowdown. The cap rate is just too high, and the prices are quite high, and the leases now need to match a lot of these raising property prices, and that's just going to be too hard for a lot of tenants, especially in an economy that's going to be a bit quiet. People get excited about interest rates dropping in Australia, but you need to recognise that that's almost an admission from the Reserve Bank and the Australian governments that, hey guys, I'm dropping the interest rates because the economy's tanking. So, and once again, recognise that is very much driven by Sydney and Melbourne. That's 2/3 of Australia's population base. The rest of Australia may be doing good. Queensland in particular is doing good. We've got a lot of projects up here, a lot of natural resource projects. We've also got the Olympics. So there's lots of funds and activity going up here. So that means we're not in the same quagmire as down south, but we're all going to be like America and Canada. We're all brushed with the same brush eventually. So it will affect Queensland as well. Hopefully not to the same extent as some of those investors and property owners down south. What else is popular in Australia right now? Okay, interest rates are all over the place. You can pick it up for 5.86 and up to about 10.74. So there's a large range, which means you can shop around, or better still, let your broker shop around. And that is one of the upsides of if the economy slows down a little bit, because banks and mortgage brokers, they still have their targets. They still have businesses to run. They still want to make sure they get the money in the bank and their loans approved. So they may start to take some riskier loans, and they may give you different rates on the interest rates. So it's a good space to watch. Do you go short-term loan or long-term loan? Look, I've always been a believer on not trying to manipulate the economy or the marketplace. So something in the middle, 2 or 3 years, you should be settled. Maybe go with something shorter because it looks like it will be a shorter period of time. But then you just never know what your property value is going to be, right? If you've got a short-term 12 or 24-month loan and it's tied to a valuation, the bank goes back and values it in 12 or 24 months' time, you're probably going to find the property is not worth the same as what it is today. So that's the trap that a lot of people get caught out with if you have a short-term loan. Other things that are happening in Australia, all right, what's the cap rate? Cap rate is probably about 4.5 to 8%. So if you've got a 10% loan and a cap rate of 8%, you're going pear-shaped. So that is a natural inhibitor on investment in commercial property. So you need to be aware of that, particularly for people who are heavily geared. I often say in my videos that I'm not a big fan of debt, and I'm definitely not a big fan of being heavily leveraged. Anyone who's heavily leveraged right now could be in a serious problem if they've got to redo their loans in the next 12 to 18 months. What else is happening? Look, there are some distressed sales coming through. People are selling for 50% of the debt that they have on the property down south. Look, I'm not being a naysayer. It's a minority of people. These are probably people who are perhaps first-time investors and weren't guided by the right people and didn't do enough homework. there is, like everything in life, risk is balanced by return. So if you've got a high risk and a high return, that's the way it works. So those people who are comfortable with Coles being the occupant of their warehouse and they're paying 3.5% for the next 20 years, they're not going to be in the high risk, high return bracket, provided they haven't got too much leverage on that warehouse. But just keep that all imbalanced. So what does it all come about with? Okay, so Canada, the US, and the UK are at probably 180 degrees to where we are in our property cycle. You'll find the cap rates in Australia is pretty high. The loans are definitely high. There's a balance on that, so those two will both come down. Whereas overseas, you'll find that the cap rate will increase and the loans will slowly start to inch upwards. All right, I hope this gives you a bit of an idea. So when you're at your next barbecue and someone says, "So what's happening in commercial property?" Say, "Well, Pete said." All right, leave me a comment to tell me what's happening in your area, because this is how I get information on what's going on, and I put that into my monthly newsletters. All right, until I catch you next week, take care and God bless.